afternoon, everyone. First, I'd just like to say I hope everybody had a good holiday weekend. We got a short week this week due to Labor Day being today. Um, Before I talk about this week's predictions, I wanted to kind of recap last week. We had consumer confidence come out a whole lot higher than I actually expected it to, along with manufacturing PMI higher than expected. This is good for the economy as we're ramping up production. Really, what I wanted to talk about was the job reports and unemployment rate. So, we had higher job reports, 15,000 to be exact, over expectations. But unemployment rate was higher than expected at 3.7% versus 3.5%. This can show to the Federal Reserve that this is good news. The labor market is strong, it's resilient, it's actually not slowing faster than they thought it would. Now, what worries me is the numbers on the surface look good, but I want to know what's happening underneath. I want to know how many of these people that got new jobs or got more jobs. I want to know how many of these are actually working 2 to 3 jobs just to make ends meet. So normally when you're rate hiking interest for interest rates, you normally want unemployment rate to go up, job reports to go down to show that the economy is slowing, and you normally obviously want inflation rate to go down as well. Now, the problem with this is job reports is going up while unemployment rate is going up. The Federal Reserve wants unemployment rate to go up to around 5%. They obviously want inflation to come down, but the problem is job reports are coming in higher than expected. So possibly expect another 75 basis point rate hike in this month. Now, coming out this week, we have some serious things are going to take. So expect some high volatility. We have the Cato Institute conference. So Tuesday, tomorrow, we have some pretty good economic data coming out. So expect this to possibly determine the direction for the day. We have a lot of Federal Reserve people talking this week as well. And Thursday, well, of course, we have the jobless claims, but also we have Federal Reserve Chairman Powell speaking. Now, I don't expect him to say too much about inflation since CPI data comes out on the 13th, which is next Tuesday, I believe. But I do expect him to say a little bit about the labor market. Expect him to say something about the labor market being strong, resilient, and actually showing that the economy is actually not slowing to the pace that they actually wanted to. Now, with technicals, what I'm looking at mainly is for SPY, we're really bouncing off of this or just kind of holding right now on this upward channel that we've been kind of fell upon. Main support that we've found is really around 390 area. This is really where the put wall is. On the MACD, on the daily, you can see that we're slowly crossing over to the bearish side. So I still expect long-term pain here, but we could see a little bit of a consolidation this week as 390 support keeps holding. We still have a gap filled down low, but that obviously will have to be a breakdown of this main support that we've been bouncing on. What I really want to look at, though, is Apple. So if you don't know, Apple or the tech sector is very seasonally bearish in September. As the MACD, you can also see that the crossover on the downside is very bearish. But also, Apple bounced off of this trend line twice before absolutely rocketing. But on this downturn, we fell through, and we've been trying to retest it. We've retested it, I think, 2 times, and on Friday, we finally broke down pretty hard. We finally got that big rejection, possibly the sell-off going into the 3-day weekend. But for SPY, what I'm mainly watching right here is we have the call wall at 400 and the put wall at 390. Now, in my daily post, I will go ahead and I will tell you guys if anything changes between these levels. These are mainly where main hedging happens, where the main call or puts are located. So if these levels get moved down, let's say like 380, we could expect 390 to not hold up as much if these levels are not as heavy. But right now, 400 and 390 are severely heavy, so I expect possible consolidation. I don't think that we would actually be able to break these walls without either news or a gap up or down. Now, looking right now at the SPY future, S&P 500 futures, we're actually looking at pretty good support right here. We're just kind of almost even a little bit, but mainly what I'm looking at is this call and put wall. Could be a possible consolidation here as the week goes on, waiting for the Federal Reserve Chairman Powell speech, but expect volatility to continue to be high, especially in the next week with CPI data coming out. Now, these are the main levels that I'm going to be watching. Continue to be, if you do keep up with the daily updates, continue to keep up with those. I will let you guys know if the call or put wall moves and as things go out throughout the week. Just continue to watch these levels, and everybody have a great week.